You need to go over.
And these down,
Mm-hmm.
Thanks, sir.
This part there. Just our passive down. While you're getting that sorted, I'm gonna give you two other items to use to you. One is just a summary. We typically give you that just says you've been over the audit for the last fiscal year. Required, of course, by the state. And, it just gives you a real broad summary. It's not, it doesn't break it down real good to give you a whole lot of use out of it, but it's kind of public notice item if anything. And the management letter I've given you now, it's the more important items, unfortunately, fortunately, as you do.
Mike, we can go ahead and put Aaron in the key up there, we'll have to deal with this. We go ahead and put Aaron in the key up there, we won't have to deal with this.
All right, like I said, you got three items in front of you for the audit for September 30th of 2024. We'll go through this, we'll hit some different points, so it'll be a little broader, and at the beginning it'll get a little bit more detailed as we go through it. This is a summary notice you see it's got broad categories, and of course this includes depreciation on assets and all the other stuff you see, so it's not uncommon to see a negative in these numbers, but it's a total revenues of $4,098,000 and total expenses of $4,913,000. That's city and water combined. Okay, so we'll break that down a little bit. That is a loss of about $800,000 last year. About $600,000 that's depreciation on assets.
Is that the 600,000 depreciations combined as well, right?
It's included in all that. So again, it's just kind of a summary of everything. We went over the boards individually last night, and we'll hit their stuff again because it falls together at this point. I mean, some boards do things completely reporting separately. We kind of adopted moving these things together 4 or 5 years ago, just because frankly you share staff, you share facilities, you share so many things. There's really not really separation that much between the two. Now, I've seen some get more formally separate and they don't really combine their stuff, but I'll show you the different statement as we go through. It doesn't really take away anything from it at all. Down at the bottom, you see total assets, $12,481,000, liabilities of $6,647,000 for net assets of $5,833,000. So again, this is not, you see the school boards have to publish stuff in the paper, you know what I'm saying? You see that kind of stuff, the county commissions, you don't have to do that. Just kind of use it for, you can post it. The main thing is it lets people know it's been done. And if they want to see a copy of it, it's always available at City Hall, that kind of thing. So that's probably the primary purpose of that.
We try to be transparent.
Oh, yeah. Let me just go through the management letter. I mean, that's the main thing, kind of how we normally do it. I'll go through the report a little bit and get some points through there if you can see. But as we kind of go through it, you'll kind of understand it maybe a little bit better when I get to the financial statements. But if you look at the management letter, if you'll notice in it states the year we audited, the second paragraph, significant audit matters, just as you'll note, basically in the underlying section there, you'll see it in the opinion letter in the audit. And because of the issues identified in the disclaimer of opinion paragraph in the audit report, we were unable to obtain sufficient appropriate evidence to provide a basis for an audit opinion on the financial statements of the board. It should say the city right there. It is addressed in the city meeting. Those matters are discussed in further detail as we go down through the letter. There's a couple of paragraphs there about allowance for doubtful accounts. What does that mean? That's like on the utility side, you've got a lot of customers and some of them got older balances, some of them really old, and you have to try to evaluate what collections are. It doesn't mean you write those balances off. People still owe it. You should try to collect it As we know, the longer something's not paid, the harder it is to collect it for a lot of reasons. So, same thing with the court system. We have to estimate that for court as well.
So back to that utility side, what you're saying there, Don, is that we had a lot of accounts we hadn't chased the money on like we should properly.
Well, that's historical, Councilman. That's not new here or really anywhere else, but it is. You'll see some of the adjustments we made as we go through. So that's a function of collection policy. It's just a function of how harsh or not you going to be. But looking down the difficulties section there in that bottom paragraph, it kind of gets to more important items here. Those others are kind of ordinary in a way, but in difficulties we encountered related to application of the billing and collection with customer accounts on the utility side, and when we say that, your garbage revenue depends on that. So it is all connected and affects you. Getting documentation regarding payroll penalties with the IRS. The cities was a little easier to get, the boards was a little bit harder. You both switched to a new accounting and billing software with Tyler Technologies there in the middle of the year, and that created a lot of difficulty in analyzing transactions and doing things to balance.
What was the date on that switch, Don? Do you know?
Ooh. It was authorized in like around the 1st of February 24, I believe. May 31st, I believe, was the date the switch went into effect.
I've got July the 16th.
Could have been July. It was summer. It's kind of the summer.
So we've been on it approximately about a year or so, a
Correct.
little over a year.
Correct.
What's the audit run through the end of September?
It's in September.
So you're on it for 3 months,
It was
3 to 4 months.
Yeah, that's all we.
I'm not sure. I think the cutoff might have been May. It was at least 4 months in there of data was in the Tyler. But either way, it's 3 or 4 months in there at least. When you go back in there and look, we had to update opening balances. Some of the other items had not been updated correctly when they transferred the data over. I would certainly say staff prior and now not sufficiently trained. And you think about how much you paid, we'll talk about, but it's, you think they paid that much and they're not, well, just understanding and they will tell you even now that trying to do entries and understanding how the process works for that software wasn't very easy, and we had to go back and recorrect audit adjustments and things like that. But anyway, probably one of the bigger areas, review of customer billing records indicated numerous adjustments and lack of charges that appear to show failure of adherence to the policies and procedures of the board on delinquent accounts and payments. We've got those noted along with other things in the finding section to follow. So those are kind of your general big picture categories of things. You got a disclaimer due to change over software, tracking ability of placing transactions, allocating transactions properly. You've got the customer issues, and you've got the compliance issues with taxes and other things that incurred penalties and so forth. So, all right, look at the second page. If you flip that over, of course we're required to communicate these things to management.
Can I ask a question? On this lack of numerous adjustment for the charges, is this water or this city?
It is water directly. It impacts the city because you collect about $500,000 worth of garbage revenue that comes to the city through the garbage department.
So the late charges, we didn't get them on garbage for the city. That's what you're saying?
Well, to whatever degree that allocates out, but you're also looking at how the timeliness of flow of garbage revenue to the city as well. So all that's involved.
Okay.
That makes sense.
Yeah.
Okay. That's fine. Oh, good questions. Stop anytime.
Well, my question would be also, if they didn't pay their bills, how did they manage to stay getting the water and the garbage and the sewer?
Maintaining services. Well, if they're not cutting off. You're not doing cutoffs regularly.
So we didn't do cutoffs?
Not really.
What's our policy on
Not according to that.
What's
Not-
our policy
not
on
like-
cutoff, Mike?
Well, we did cut off, but there were periods of the year when billing software was so difficult, we did not charge late fees, and we didn't cut anybody off.
It fluctuated, it's fair to say that.
Yeah.
That's fair to say. Let's go through that in a little bit more detail for you. This is gonna be, useful information, I think, kind of sheds light on kind of where you're at financially in a lot of ways, where we've been, as you know. We talked about that in actually a couple of meetings even prior to now, so it's not, to a lot of you, and then some of you were here last night, it's probably not new. Some of you get to hear this all over again, so apologize for that maybe. But if you look at this, and I'll mainly focus on, of course, the city part of this as I go through these findings and so forth. We covered the others last night as well, but IRS transcripts for fiscal year 24. Okay, so assessed, charged to the city or relating to that period, because some of this comes in after the fiscal year is over with. $17,415 in IRS penalties and interest on the city portion alone for 24. Additional there for the board as well. You had back to fiscal 23, it was about 9,700, and about 2,500 or so of that didn't get hit into the year you're in now. So you're taking about 7 probably.
So-
but you're talking about 18,000. When you throw the state withholding on top of it, the city's incurred about $18,000 in penalties in the past year.
So it was 17,415 just for the city, plus the additional
Plus the
78.
other parts from
So you're looking at 25,275 in back
combined.
back pay and penalties and interest in the IRS,
That's correct. That's correct.
just for the city, not the water.
That's correct. Some of that on the state withholding, again, not as big there on the state withholding side. Just typically smaller amounts for one. So, question we kind of raised the question one time. We actually covered this a little bit. Can we pay penalties? Well, the state's going to get theirs. You can't file it without paying it. Unfortunately, but in the utility tax side, they really took a hit there. They paid $5,200 in utility tax penalties. Late paying utility taxes that were collected from October 23 through March. The WEX account, this directly involved the board, but the difficulties in the software, and then as we kind of recommended before, try to pay all these things separately as you possibly can, so this reimbursement back and forth stuff doesn't work very well. So the direct side of that is the WEX account was charged about $15,347 in penalties on fuel payments. Some of that the mayor was able to get abated, about $1,700 of that. So to the extent that's kind of charged on the board side, but then you start thinking about reimbursements and so forth, it kind of gets lost on the city side of that a little bit. 6 and 7, we went through really an 8, heavily involved the board side of this. We identified over $8,000 of questioned adjustments to charges on accounts of employees or persons who appear to be associated with the staff and the billing collections. Got a large amount of what I would call unknown late fees not charged or assessed, and you could just policies just not really clearly followed. There may be some questions within the policy, and so I didn't bring all that. I'm not going to go through it all with y'all because we did all this at nauseam with the board last night, some of it in executive session. But just clearly there's some issues within the policy that might be gray, and then there's other areas where it just clearly looks like things weren't followed at all.
As far as cutoffs and things like that.
Cutoffs, late fees, reconnect fees, instances like that. And, we looked at that side of it first, and then I know the board raised the question, y'all raised the question previously about forensics or other kind of things that might be done and kind of holding that on the table and so forth. We went back and looked at really more than 41. I listed 41 accounts, it's actually more than that.
What is it, 60 something you said last night?
Around 60 or so last night, total probably a little.
Out
over
of how
60.
many?
Oh, you got what, 2,000 on them?
Probably got what, 2,300 customers?
2,300,
Oh,
close.
but when you looked at that sample and you got 18, 19 out of 40, basically you got about 50% of the accounts surveyed all had the same problems. So it was, it's just system wide over there. That doesn't directly relate back to the city in the sense, other than the fact if you look at the collection and remittance and historically, with the city side here, not just here, but most cities, the cash flow is really up and down. You have peaks and you have a long period you gotta get through to get to when revenue comes back in strong, Well, when you're not getting your payments properly done and remitted over to the city for whatever reasons, and you're not, the cash flow is not there, then all this stuff ends up affecting you indirectly, because that was recurrent through,
No,
through the period. Yes, sir.
so if we're not, if we weren't, going back collecting,
Mm-hmm.
and then we was missing on some of the money, say like the water, you said it was part water and sewer. On my water bill, I got it where it said tax.
Mm-hmm.
Where that tax go?
Well, that's what I'm saying, you collect that tax, you gotta send it to the state.
Okay, from the water. Do the city retain any?
No, no,
None. And garbage, Mike, we didn't have no late charge on garbage, did we?
No, it's billed with water.
yeah, it's built in with the water, so it kind of minimizes that a little bit. The
Yeah.
real issue on garbage is just the functionality on their side, because that's getting the money collected into back to the city's account on time.
Okay.
And number 7, kind of the same stuff there. I won't go too deep into that one. It's just issues within accounts. That amount's included in the total in the number 6 above it. So we went over all that with the board. But making sure that the accounts are reviewed and properly charged is important. So question on that one came down to whether or not an account was residential or business. Put in a business name, but it's kind of out of residence. But then if it was in the business name, should have got a business rate, did it pay a business license and that kind of stuff. Not a ton of money to you, but just indicative of the general problems of following the procedures there. So,
But you couldn't find a record that it was ever paid.
no, ma'am.
Okay.
So between
I
six,
did not, we did not find where the transfer and the balance that was owed in the transfer, we couldn't tell whether that had been.
so between 6 and 7 of accounts related to staff, you were about $10,000 in question.
Oh, well, 8, that bottom part's included.
That's included in the 8? Okay.
The board didn't meet their debt ratio requirements, obviously. The city doesn't have quite the same, their revenue bonds on the utility side, so that's very important. On your revenue, you could probably go, well, we didn't meet your debt ratio either. You don't have that issue because your general taxation power is different. So that's why it doesn't really directly affect the city. Number 9 is just, it's not uncommon, but, minutes need to be signed by the clerk and the mayor and followed up on. And, then you got the clerk leaving and all that stuff. So, the state writes you up. They get mad about that, so I guess I figured I better write it up too. But you need to sign the minutes regularly and that sort of thing. And
The council?
well, typically it's the mayor and the clerk. In the absence of one, a council member would typically sign.
In my first term, we all had to sign it every time. There was a spot for all of us. Then we just stopped doing that.
Have some that do. There are some that do, and it's not a bad practice. It might be something you want to encourage to do and let everybody sign that. Because
We
number
did
one,
start with, then we did-
it just that way everybody remembers. If somebody's out and missed it, something happens. Hey, where's the minute? And that's certainly that would be an improved practice to do that.
Who makes that
We
decision?
did it for a long time. and We did.
Who makes that
I don't
decision?
know why.
Do the council make that decision, or the mayor, or who?
The council, y'all could pass a resolution to have, or a motion to have her provide the minutes for place for all of you to sign and be well within, I think, your rights to do that. I mean, typically, you're authorized the mayor and the clerk, because they're the responsible parties. The clerk particularly maintains the minutes, and that's their duties under that office, so.
Yeah, and when we approve the minutes at the next meeting, that's our sign off, and they're
Yes,
they're
that
basically.
would
They're supposed to
Yeah.
just initially
Yeah.
put it
Yeah.
in.
Right.
Yes,
Yeah,
that's right.
that's
So,
good too.
you know, my suggestion is just need to go back and do that.
Yeah.
Go back and cover that and get that done. So it's in the book like it needs to be. This is a little bit relevant here, but everywhere. We kind of hit on this in more than one place around, and tonight's not necessarily a bad example. You got a council meeting, a lot of people, nothing wrong with that, but you know, you're one doorstep away from all kinds of personal data and stuff that belong to the public. It's their individual data you're responsible for, same with employees. And so, you know, just some observations here, and again, really everywhere to some degree, is making sure that folks behind the counter have business behind the counter. You know, people gonna come in and visit. You're a small town, you're gonna try to do things and be cordial in that regard, but, you know, at times you got
I know you
folks that
shared.
gonna come in, talk, do whatever, and they shouldn't.
I know you shared a personal experience on that when you were working on this audit.
Yeah.
You had it spread out, and you know, had folks walk in while you were working.
Yeah.
So
So that happened here, and I've had places where family member of an employee just come and hang out behind the counter all day for 6 or 7 hours while I was there in their work hours. And I'm like, well, you know, there's all kind of data back there.
Yeah,
So, you know, try to do your best to kind of minimize some of that.
Do we
It only,
have a
it only
policy?
takes one, you know, it only takes one.
Yeah.
Screw up.
That's all.
Makes the city look bad in that regard. You know, and it's not, it's been going on for a long time.
Mike, we got a policy for that, for people just coming in when they get ready or standing behind the counter. Do we have a policy where the clerk can tell them they can't come back?
Yeah.
We do?
I mean, it's,
Yeah, I mean,
it's posted.
It's posted on the door. You know, if somebody has official business, you know, they come in.
but
Now,
nobody
like
needs
for
to know.
meetings and all, we've started locking all the doors where any information may be.
Should anybody be coming through there while we're back in meeting?
No, I mean, doors are locked.
Should anybody be in her office while we all back here?
No, the doors are locked.
You got locked.
You do that now?
Now,
Got
they're
it.
lucky.
Okay,
Yeah.
Weeks ago.
Good.
good.
Well, that's,
Just
again,
one.
just a reminder, Council, you're right. In that instance here, I was kind of like, you know, we're working on official stuff. I'm not sure why. Person was back here.
There's a sign.
They weren't an
that says
employee, they weren't an
employees only.
employee, so I'm not sure
Yeah.
like what that one that happened. Credit card activity, again, this is kind of not it wasn't a huge item, but it's enough that it's kind of one of those things to make sure, so I really want to kind of go back and cover it, because we covered it with your staff, and Tracy and Rebecca as well. But, you know, there was Amazon entries, there was a few we couldn't get all the documentation on. One of the cards we particularly, it was like related to the fire department. We just, in the timing we had, didn't get the documentation behind it. Going off of what it was reported it was. I don't doubt it, it's not a huge amount of money, but again, kind of the things that I wanted to kind of reiterate is, because it's a problem, not just here, but it's kind of, you know, we're all buying online. That's all the big rage, you know, and we do it because it's convenient and we don't have access to stuff. So we buy online. Treating that every time you purchase that like it's writing a check, and printing that out, and putting it with stuff in the file,
It needs to be a paper trail.
and have it on file, and not, because here's what I run into. It's not just here, that, but it's, well, let me go pull it up. Well, that's, you should have it documented like you would any other expenditure. It's not just to go pull it up.
So looking at
So we had a couple items in that second sentence you might notice. It was for personal nature, purchased through the city's account. Okay, it was on the city's Amazon account.
Amazon
but they
login.
paid Yes, the login, but they pay for it with their personal card.
Okay.
So that wasn't a problem. Where you run into problems is if you're doing something like that and you're avoiding paying the sales tax or something.
That's right.
Actually, I think in a lot of those instances, y'all actually pay the sales tax on the purchases anyway, because it's very hard and it's very common and you get it in a hurry, so who's got time? So the best practice there, number one, is just you don't, and as I told a couple of your folks in there when we were doing it, I guess that's probably an April. Just don't. It's a city login, email, it's a city credit card, city purchase, that's the only thing goes to there. Don't try to avoid that completely. And then really in those circumstances, you know, should that happen, on any kind of reimbursement or anything else that, you know, you do. And, but the credit cards and the Amazon stuff in particular these days are very problematic, and I'm just trying to.
But you didn't find anything where personal items city funds were used to purchase personal
I
items?
didn't, in the items we saw, no.
Okay.
No, I did not see that.
Some of it you couldn't get, right, off the card, right?
There was a few transactions that we think was, according to what the staff said, they thought that was the fire department stuff. And we didn't, by the time we got through, we never got back to look at that. It was a few $100, but it certainly worth going back and pulling and double check it. You can certainly do that. I know y'all can get a hold of that and pull it up. If you haven't already, you could have already. Just double check it, but I think that was fine. Number 12, on the last page, I'm kind of about through with these. I want to try to go through the financials kind of briefly. It's got accrued leave, and it's 205 hours by the former clerk. The issue is the beginning hours weren't documented on the year before on the city side. So if you track it, the hours weren't there to be paid. The problem y'all run into, as I mentioned, is you got stuff combined. So it looks like hours were tracked on the water side, just not simultaneously tracked on the city side.
So in other words,
That was never signed off on, I guess. Is kind of what I'm saying. I don't think anybody ever presented that.
So-
Hey, here's
You
what
would
I
be the
got, I
one
need
to
to
sign
show you.
off.
Yeah,
So,
and
in
that's
other
been
words-
corrected.
if you're taking
Split.
20 hours of vacation on the water side, but you're working 40 hours on the city side, how are you doing that at the same time you're taking vacation?
Well, you shouldn't, that shouldn't happen, and I'm not saying that's what this was, the problem we're getting into is if you're using 40 hours of vacation and you deduct it over here, but you're not ever keeping up with it over here. I'm just gonna use 1/2 of the house to keep up with my time.
All you gotta do is pull a time card if you had one.
Pull it up, should have been kept up both, so the problem is what rolled over didn't have any time on it. Now you ask me, I think the time's there, but it wasn't documented like it should have been. So anyway, you know, we spoke, Mayor and I went over that, we talked about some of that, and,
It wasn't documented.
no, not like it's supposed to be, that's the problem. I'm not sure that it's wrong, I just think the problem is it's not documented, so it's just like the item 13, you got the sick time and getting donated to other individuals. And to the extent it's happened before, okay, but it's not written up anywhere that's what you're supposed to do. Policies just have gaps there that need to be firmed up a little bit and needs to be documented like it's supposed to.
Need to be firmed up a lot. So Mike, you didn't approve any of that donated time in 13.
No, I'd have to look at 13.
No, line 13.
I'd have to go back and look. No, I mean, what he's saying is just needs to be documented, and that's been handled because we split water and city, and
Well, he's
that's
saying
not possible to do that anymore.
He's saying in 13, it was also noted that the previous clerk donated sick time to other employees. We did not note anything in the policies or any other approval for the transfer of those hours. If this has been past practice, then it needs to be documented and approved.
Yeah, I see what you're talking about.
I guess the question, if it's verbal, it needs to be written. And then if it's happening, and then I'll run into another problem with these things, is if somebody does that, and it's given the okay, but it's not in policy, then you start bringing it, Mitch could probably elaborate more on it, but then all of a sudden you start blurring your policy, because you gotta, when you get into HR, you gotta consistently apply
It all needs to be written.
rules like that, so you really need to kind of.
So you didn't approve that?
Yeah.
That, so,
Which has been corrected.
But you,
Financially corrected?
Well, we've corrected the
But who signed
procedures.
the check for these hours?
Well, he'll talk about that too.
Okay.
yeah. Well, and payroll, and Tyler, that's one of the problems you run into, is the check signatures got saved in the system.
So is that not something
That kind of allowed stuff to kind of get done, and again, I don't know that either one of those two items are wrong, but it's just.
well, that's wrong if it wasn't
you got-
approved,
if
so is
it's
that,
not
Well,
properly.
we stopped that too.
I mean, if it wasn't approved, is that not something legally, Mitch, that if that wasn't approved and a check was signed and money went out for something that wasn't approved?
Well, if the sick time was there, I don't know what I just first time I've heard this, so I don't know what our policy is on sharing sick time or whatever. I can take a look at the handbook and see if it's allowed. If it's not, we need to, if that's something that we want to do, we need to put it in the handbook.
Because that's a lot of money.
Well, and our understanding was that maybe it happened before somewhere in the past, but again, if you're gonna do it, you need to have it clearly written up how you're gonna do it. And I don't think the policy really gets to that extent. And then, so you kind of mirror that back to the item about the leave not being accounted for on the city side. It kind of really gets to more of again, it's lack of detail, lack of paying attention and documenting like you're supposed to do, even if it's a practice that has occurred before.
No
Needs
checks
to
and
be
balances.
Yep.
properly checked and balanced.
I've said that
Yes.
several times.
Exactly.
And how can somebody donate their sick time to employees?
Well, other places do it.
We-
I bet no left Howard did it all the time.
You know,
When
that-
we retired though, as a state employee, I lost days when I retired because I didn't use up all my sick time and I couldn't give them to anybody. Not even anybody had a catastrophic leave. I just lost them.
can't do it.
So I don't know how you can do that here. If it's a policy, yeah, but I've never heard of that policy
No,
where you
you
donate
You can't do it.
sick days. If you don't take your sick days, you lose them.
You lose them.
You don't get paid for them.
I know for a fact you lose them.
Well, I know for a fact,
You lose them.
I know for a fact that it's been done for 42 years with the city of Centreville.
So you can just, when you leave, you can donate your days to anybody.
No, I ain't talking about when you leave. I'm talking about during the employment time. There's been a lot of cases where, for instance, we had an officer critically injured. And he had to take off a while. The other officers and employees gave them
Days.
their sick time.
Now, we could do that because we were in a sick bank. We
Right.
didn't just do it to them if they wanted to go on vacation.
That was just for critical.
No,
What's
no,
this for
no,
sick
no,
leave?
We had
right.
to do it through,
Just a
we
sick
did it
leave.
through because
That's what.
catastrophic.
Now,
Yeah.
how they kept up with it, we didn't get into that because, that wasn't our business, but we've been doing it since 1982, I know for a fact.
Don,
Okay, y'all just did
if
it
what he
just
said
today.
and what's here, it's two different things.
Well, yeah, Mike was talking about sick, if it was
Well,
critical, somebody had a need,
It's
somebody had a need.
And they're still employed.
That was the
Yeah,
same way with
And that's
state.
that's what
There was a sick
and that's what
bank.
the item 13 is. It goes to that. It's just you're gonna do that. It needs to be written up.
Document it. That's right.
A supervisor person should document it. It's like you got, if you're the clerk and it's something that affects you, well, you clearly need to get somebody else
Yes.
above you to sign off on
Yeah.
that, wherever you are.
It's
You gotta
two-
look at
it's two
divisions
different
of
things.
authority.
Two different things we're talking about. 'Cause we're talking about
So-
somebody just giving hours away versus somebody that has a critical need.
Well,
for those hours.
and the understanding was it was given that you had some folks that
Yeah. I
were
remember
having some sick time and out sick, and that was what it was for.
We went through a sick bank for that.
But
Yeah.
I don't
Yeah,
think y'all have that
right.
really set up, is what I'm saying, Ed. So you really got some tighten up there, and I would go back and review that a little more, maybe after the fact, and maybe something that's Mitch and I discussed a little bit, some items to go back and kind of follow up on a little bit to see. Again, I think it's a case of stuff that's been done, and maybe the past practice didn't really document it like it should have been either. you know, it just kinda happens, I mean, you wouldn't be the first place to do that. But you kinda get an issue of you're working here doing it, but if you're in separation mode, then you still do that kind of stuff, you know. So you start running into variables, and I think you just got some inconsistencies in application that really need to be addressed.
As far as one department I can speak on, when I had that case involved, and it was numerous times over the 35 years, all the timesheets came to me.
That's right.
I went over it and I transferred those hours.
Yes.
That's right.
Now, what happened to them after that?
You did. Especially the guy you offered that flip over there. We had on hours, you give a lot of hours in, yeah. But you had it documented.
Okay.
That's different.
Well, yeah, you gotta be really careful about those things and careful about, you know,
So, Mike,
those procedures.
is everybody doing a time clock now? You're keeping up with the times, that's some of the
When
changes?
you log into the computer, your time starts. It's
So
a,
there's a time clock on the computer.
And have we set a policy now moving forward to where, or should we set a policy moving forward where time can't be just given away unless it's a critical need?
for sick time, I guess, yeah, we could. And we did, like I said,
Like we did with
They did it
state,
before.
it goes into
Same thing,
catastrophic
yeah.
leave, make sick bank.
yeah, and it's documented, sign off.
So Tracy,
It'd
when
be
y'all,
easy to do.
when y'all sign in, y'all go to a time clock thing and clock in?
No.
So how does it clock you in? You
When
know,
when you log into your computer,
no,
your
you can
computer.
log into it anywhere, anytime. We had a time clock on our computers, we had to have a code and our PIN number, and we clocked in, if we left, we clocked out. We came back, we clocked back in.
That goes back to checks and balances. We talked about many
Yeah.
times in the past. That's something we need to implement
Well, what
to
happened
stop
to the-
this.
Time clocks.
Well, the time clock that we bought,
Yeah, we bought 3 time clocks.
3 of them.
One was supposed to be in the
They told
office
us it was in the.
behind the door.
I haven't seen any time clock.
We'll check
The hours
that.
in question, just go back to my notes, was 404 hours that looked like it appeared
Sick time.
donated sick time to other individuals to use for sick time, and, you know,
So we got
some verbal approval was given, you know. that-
609
That
hours.
could be the mayor, or, you know, hey, you could then come and say here as pro tem and say, well, oh yeah, we've done that in the past. That's,
So you got
I
609
understand,
hours
and I
total.
understand that, yeah, and I understand that, but nobody's checking behind, hey, check that, balance that, make sure it's good enough.
So it's 609 hours total we're talking about. 404 on the sick time and 205 on the vacation.
Right.
Wow.
Right.
Wow.
Oh. And look, I'm not sitting here saying that all that is not, all that needs to be repaid or anything else. What I am telling you is that's a lot of hours that could be an issue, and if you don't address how you're doing stuff, then it can continue to be an issue. It could be an issue that really runs afoul of, you know, with property.
Right.
So, you know.
Over 15
But
weeks.
that's
That's
a
over
lot of
15
time
weeks of time.
that's not properly documented.
Wow. So Mike, can we get a time clock implemented? I mean, that's obvious that we need to do that to stop
The street.
some of what's
street-
going on.
straight, yeah,
They
straight
use
water.
that, they use.
Well, street and water, but you also have employees in City Hall here.
Yeah,
We need a time clock. We
There
need to
should
be
be
punching.
one in there.
We
We were
bought
told there was
3.
one behind the door.
We bought 3.
Let's hook it up.
We bought 3.
We bought one for the water department, one for the street department, and one for the city hall.
And this was because the auditor told us we better be doing this than previous.
And I don't know how many times we have tried to get this one up here, put in, and everybody, we was said, it's in. Then,
But
one
they
of-
never would produce stuff.
no, they would always come back and check and that was there. So, it is what it is. It ain't there now, Tracy, is it?
No, she
I've
said
not
she
seen
didn't.
time clock. That was good money to throw away on the
Yeah.
time clock.
With money.
Well, dig them out of the closet, hook them up.
Hey, we can make this happen, write it down.
I think you had that in,
It didn't happen,
but really,
unfortunately, Rich will tell you that.
Well, Don-
It don't really happen, does it?
but Don, you had that in two of your reports, back-to-back years that we need to do something about time clocks. And that's why we went ahead and ordered the time clocks. You told us twice.
Well, we talked about several.
We've told them numerous
Yeah.
times.
Several things.
Hope they work. Warranty's out on that.
Let me go through y'all's financial just for a minute. We'll take a few minutes. We could, and if you want to take longer, you can. We can circle back to some of these other items. There's probably a couple things I may hit on as we go through. That may answer a question or two you may have. But just so you know where things are at, if you get past the table of contents, page 1, those operative 3 paragraphs at the beginning again just state the year we audited, September 24, fiscal year, that we did not issue an opinion on the financial statements because of the disclaimer, which is the 3rd paragraph, which really is what we read earlier. It's not anything different, but this is just where it's located.
Where you at?
It's technically page 1.
Yeah.
It's the first 3 paragraphs that kind
Hey,
of.
Don, going back to the items you listed.
Oh, yeah.
So 14 and 15.
So did I miss something?
But 14 was saying that there were checks being signed without the mayor signing them, basically.
Yes, that's that Tyler automatic stuff. Yeah.
So the mayor wasn't even approving these checks.
Mayor, I don't think she was giving you copies of everything to initial off before those checks were.
I mean, that's an ongoing issue with the part-time mayor, because I'm here most days,
Right.
but I'm not here every day.
Right. Yeah, that's problematic. Now, it's not a whole lot different than another city that I've got where just 2 staff members are signing everything, and the mayor and council never sign anything.
But a lot of
And I'm
council,
like, that's just
Well, you know, it should be coming through.
worrying yourself.
It should be
you know?
coming through the council anyhow to be approved.
So you should be getting a list of bills
Correct.
that, and what will typically happen is a lot of these bills are already paid because you have to pay the light bill and things as you go in the normal course of business, but you provide the board or the council a list of all the payables, everything that came out of that system. You should see it as your payables and approve that, be able to question it. And I don't think you were getting all that.
So the council didn't approve checks, the mayor didn't approve checks, checks being signed randomly at will. That goes back to checks and balances there too.
How many checks was written without it? Do you know? It's a count though. It's a number. Ain't it?
Oh yeah, there's. I mean, yeah, you have to go back and look at them.
Give us that cent, call
But
us.
it's.
Get that number and call us.
And you got the accounts and the bank statements and those parts of it are reconciled. We go through there and sample and pull them those and check and see what's there. Goes without saying with what we're talking about. There were some items we're trying to track down documentation on one way or another and didn't get everything. That's part of your problem in this, but
Go into 15 a little bit there.
that stuff didn't really get into.
What are you talking about?
I think most of that, if you looked at it, would be kind of ordinary occurrence. 15 just kind of gets into the related parties. I mean, you had 2 staff related. Tried to separate some of that, and then what you start running into, we're trying to run into it, is mainly related to the board, is just people dealing with their accounts, and the familiarity issue there when you're dealing with accounts like that. It's just not the best practice in the world. And I think one of the issues we ran into with Larry was not getting cutoff stuff, the full cutoff list.
So the full cutoff list wasn't getting to the
The
supervisor.
full cutoff list will get
Betty,
adjusted or vetted or whatever before he ever got it.
Wow.
Well,
What was our loss?
anytime you got related parties doing that, then obviously you should have had.
I'm trying
And
to
that
think.
was a fault on Larry too. I mean, everybody bears responsibility in the court. He's not innocent of that necessarily either. He's like, hey, I really probably should have looked at that at least periodically. Give me the whole list.
And I'm trying to think back from last night. Wasn't that around $50,000 or $40,000 in cutoff fees that we could have recouped?
The cutoff reconnect late fee category was down from 75,000 to about 35,000 year to year, down about $40,000 in 24.
Wow.
So a pretty substantial difference.
All right, go on. I'm through. Go back to where you were at.
No, that's fine. That's no problem. Thank you for catching me on that. All right, like I said, I want to go back to page 1. Now, just showing you that. I'm not going to read all this stuff. A lot of this stuff is similar, but I will hit a few highlights on some financials, but I want to show you the areas. So that page 1, out of all that 3 pages, those first 3 paragraphs, we audited 24, We didn't express an opinion, here's why, because of these overall issues that we've been talking about. Kind of hit those three broad categories of penalties and compliance, the GL transfer, not being able to properly allocate and keep up with your expenses like they're supposed to be. And then the billing side of the thing not getting done. If you look at page 4, it just begins a discussion section. We've hit all the bullet points pretty much, so the ones that probably you're caring about, but I want to kind of flip over to page 5. And you think, what are you going to show me on page 5? The first line in that table, okay? The first 2 lines relate to the governmental side, that's your city side, and then the middle 2 are the business, and then you got to combine all that. This is kind of a 20,000 foot view of numbers, but just to give you an impact, if you look at the current current assets, that first line from 24 to 23, it's all $350,000, okay? That's mostly cash, and some receivables were down. Some of your economics weren't as good in 24 as they were in 23. It's just not. The sales tax wasn't going up. If anything, it trended down a little bit. If it hadn't been for the online sales tax, you would have been down.
What was the difference between the two sales taxes year to year?
Well, I don't have that one specifically. The next page, I can tell you the overall drop in taxes was about $42,000. It's the first line on page 6.
So 42,000 42 of that was, of that 350,000, 42,000 was sales tax.
Just drop in sales tax. Let me come back to that question. I'll be quick. So I wanted you to see that the utility board's same thing, kind of the same thing. Your particular side, and you're going to see this down in that, about the 5th line down where it says current liabilities, you're going to see that number went up 100,000.
Mm-hmm.
That's mostly payroll taxes and retirement. The bulk of that increase that were not paid at the end of September. And then I get paid 2 months of payroll taxes for August and September, didn't get remitted until December 17th. So the tax liability plus we accrued penalties back on some of that as we were able to get information from the IRS. So
So insurance, payroll taxes.
payroll tax.
Payroll taxes.
And then retirement had, near the whole month of August and September were remitted to the retirement system in January 25. Along
I
with,
know you had penalties on that.
well, thankfully in your case, no. Because you're a municipality, this retirement system gets real bad, and get stuff in there. If you run a 401k or a simple IRA, like probably a lot of people in this room have, it gets very legal at
Big
that
time.
point. It gets legal at that point. In your case, it's you just get David Bronner mad or something.
Yep.
Anyway, that's been caught up. If you look at page 6, look at page 6 for those first 2 columns, kind of the primary one. We'll go back over the utility stuff again. But if you look at those categories, overall taxes were down. Your online sales taxes were up, I think, about $25,000 maybe, because they all went up about 13% year to year. So the rest of SSUT, so your other sales taxes were doing this.
Because they increased SSUT across the board.
Yeah, that went up.
Certain size cities.
So if you notice right below that, licenses and permits were not up. They were pretty steady, but they were still down. They didn't go in the right direction. Your intergovernmental, some of that fluctuates, but certainly not up. That's going to include shared taxes for gasoline. Tax revenues, rebuild, some of your local motor vehicle or some other things like that go through there, the state capital fund. All that goes through there. So even that category was off, nearly $60,000. Fines and forfeitures, skip down, fines and forfeitures. The net amount from that, down $30,000 year to year. Some other little odd and end items, even that last category is off $5,000. So if you look at your revenue trend, it was going the wrong way by over $100,000 from the year before. And then if you look at your expenses in the section below,
Fines and forfeitures.
You added payroll and added, $60,000 worth of Tyler bills just on your side, not counting the water spent. You added some other expenses. You added, you added debt on a truck, you know, you borrowed 250,000 or whatever number that was for the grapple truck. So that payment's $5,000 a month, so interest associated with all that, so.
Don, back at the
I mean,
top.
sadly, I can fill the gap between 100 and 460, and you know, the 100 doesn't throw me in a whirl of panic, because I know you have depreciation and you get grants and all that matters, because you do have to replace your assets, and to the extent you don't get grants 5 years from now to replace something, you gotta pay for it, you know what I'm saying? So it is important, but from year to year, it may move some, and you know, panic over that, but going from 100 to 460, that's devastating to your bottom line, is of course, y'all know, the mayor and clerk, we're all aware of that, so.
At the top of this page here, you got a statement. The prior year information was audited by a different firm. Did you not?
It's a mistake,
Okay,
not a mistake. I'll pull that up.
sorry.
No, thank you. I'll correct that in Tracy's PDF, because she hasn't sent this in. I'll pull this one over to kind of get the format. Sentence. Thank you, sir. That's why we go over it. Part of it. It's one part of it, anyway. All right, let's see. But that gives you city side for you is you get so much information in arrears, and your revenue for the good is not consistent right at all. Like we talked about, you get 60% of your money by the end of February, and you got over half a year to go. And then you really think, and you say 60% by the end of February, the really doesn't take into fact that October's not real tentative. So you really got about 6 or 7 months of the year that kind of hits just basic revenues. All the while your expenses are still collecting at whatever you approve to spend.
And all the
If you
while
make-
we're living above our means.
And if you make, if you're spending money on stuff, if costs are going up, if you hire a police officer because the police chief says, hey, I'm short,
to run a city.
it's bad. It really is, and it catches you out of plan. It happens, but it kind of catches you. It's how things kind of get turned negative like that. A lot of times it's worse before you can really notice it because of cash flow. And I will always be reminding people all the time, don't buy anything in January or February to far. Why? Because you got so much money coming in January, February, March, you think you got a lot of months. That's right. That's right.
This one kind of went the other way. You got culture and recreation there. You went from 172 in 23 to 229.05 in 24. What did we do in 23?
I'll go back and look. I don't know that was part of the.
Just not a bad
Some of that was related to the historic stuff, because when they did the sale on the historic building, with the caveat in there, that was booked at a much higher number. So let's go back to, I think 130,000 of that was all the booked on that transaction. Right. That's where that thing goes. 6 culture audience. Yeah, good spot. But yeah, that's that historic building. Sarah, let me bump over a little bit just so you can see where some of your other details are. Page 10 gets into those big gross numbers. Not a whole lot I want to go over here. I mentioned it, we probably hit this before. That about halfway down in the liability section, you can kind of see the conglomerated number of payroll liabilities there. Again, I mentioned 108,000. There is a number below that. We discussed this last night with staff here. This old balance due to from that the general fund owes the water. So the water's historically sitting out there with garbage revenue and stuff, and it's owed reimbursement back to the state. that has not been cleared up. And of course, but your new staff not understanding initially how the like reimbursements were supposed to be done, so we fixed those out. So
We're not supposed to be doing that anymore.
well, like health insurance, for instance,
Correct.
it's all getting paid out of the jail, water jail.
So 84,320.
So 84 is due back to the other way to the city. So I don't know where that number is now. We went through it, maybe a little up or down, probably a little up maybe. But, the suggestion was for them before the end of September to go ahead and get that cleaned up. Well, the way to do that is figure out what you owe. Between we can help a book it, subtract that 59 and send it to zero fund with the difference. Yeah, because they couldn't afford to give you $100,000 trustees. Right.
Done.
So that would kind of help clean the books up and shift a little money to help the city side at the side. Do we need what you need? Yes.
Down the water in the city are two different entities.
One corporations, correct?
Why does water not take care of their insurance and the city? Why is that not separate? Why does a city pay it and then they try and get reimbursed?
That's a good question, but I think that account got put together for our employees with the local government, deal, just like the retirement system lumped together. I've got two different corporations, but yet RSA has decided we're going to put them all together.
When Mitch just told us,
At the end of the day, that probably helps.
we could not transfer money back and forth when we got into an issue not long ago.
I don't say you can't transfer money back and forth, but they are two separate entities. But because of the way things are set up, for example, that he's been talking about garbage collection. I mean, the water has historically collected that. I guess the city could send out a separate bill, and collect, but there's always been back and forth. Now, borrowing to wants money from one to the other. Don probably wouldn't recommend that, but there's money collected by the water that goes to the city and vice versa, and probably the insurances, I've never looked into it, but probably the insurances are the same so that we get a better rate. Yeah.
You're referring to borrowing money back.
Yeah. Mitch, could I ask you a question? I'm reading where they can do that, borrow back and forth.
Mm-hmm.
But like if water wanted to borrow from city, they have to come to the water board to tell them that they're good. Am I right about that? Tell me if I'm wrong. That's the way I read it.
Right. I would think that both entities would need to be talking to each other.
Say that's never been done.
Yeah.
So
I've done it before. The water board, whenever they bought, especially that building down there, the water board in the city came together to purchase that seal. Anytime you're dealing with construction, remember that savings correct. You said whenever you're dealing with water and the sewer, you're dealing on a project that's the same. You bring them together and let them reason among each other. And see which way the payment's going to go and what's going to be borrowed. Whenever you got one and they are doing it, then you got one person coming in to tell them as a group. Too many things been said, and that's about like the annexation I was talking about. They need to come together as a group. Not as one individual taking the company. Person go back. Things, what was said, be changed. Documentation went back, it's right out of it, and it's been what's in signature.
I want to point that out just because that's some of those internal things. Maybe your specific question probably gets in legality issues is utility boards can't go out and just pay general fund and anything. You can't. The utility board must. The city is in the bind, we're just going to give you $100,000 of this goes spend it, or we're just going to pay a bunch of your bills for you, and this, can't do that.
yeah,
Can't. It's just legally.
up this bam.
Now, most of what we're talking about here is super tough. This back and forth money, the garbage, the expenses, again, as we kind of recommend in the past, it's better you can figure out how to separate that, the less complicated these things get. The easier it is for you to follow your financials, and easier for them to be able to reconcile. Now, some of it, the retirement, you actually fix that. Well, maybe you can figure out, pay stuff separately than that.
We have done
They
that.
don't force you.
We are doing that. The retirement
The retirement account is one account on the computer. When we sign in, it's all in there. But Rebecca pays the water department's retirement out of the water department account. And then I go in and pay the city's retirement out of the city's account. It's one account on the retirement side, but it's coming out of two different checking accounts.
So that's something, that's an improvement. So you and Rebecca and Pepper them.
It was actually, the retirement situation was that way before I came here, so I'm not sure how long it's been that way. We've also done that with the WEX bill, the gas bill between the city and the street and the police. We got, like, she pays their part out of her check account, and then I go in and pay the city part out of the city account. So it's one account, but it's getting paid out of two different funds because
That's good.
and the health insurance, we haven't been able to separate that part yet, but we are, like, we take the bill and break it apart, and then she immediately writes a check to the city to cover it. But we're working on getting that separated off.
Great job. Great job. Great.
All right, real quick on that RSA thing, just as a FYI, nothing else. If you halfway down there, you'll see a total liability of $453,000. If you add the utilities to it, it's about $743,000 deficit at the retirement system in the city's overall accounts.
What page now?
It's on page 10. In the non-current section down there, about 2/3 of the way down, so it's RSA.
Okay.
Anyway, we talked about this. Well, that went up a good bit again, and all that means is you paid on that 11% match right now, which isn't great because you got folks that's paying 5 or 6% here, having to pay in nearly double that on the match. So set up your budget, but I've seen worse, so just keep it fair so don't get worse, I guess. But anyway, that's that part.
I mean, Don, how else going to be is that part of the people that's retired in the city? Is that part of that also?
It's calculated through that, you know.
Anyway, Mr. What was just like?
It is. That was about $80,000, which is overall net liability issue.
Probably. But it's like you would always come. Yeah.
Real quick, page 13 of Jeff. Far out a little bit. I was planning to assume I'm going to put a couple of pages of notes on that. You in case these are your books that Teddy can look through, and like I said, I'll get any all those typo corrected and just all that with back to the formal copy for Tracer for the minutes and PDFs, because you got to send all this to Montgomery Examiner accounts and all that. But if you look at page 13, it kind of shows you where you were at the end of September in some of your accounts. We still have ARPA money in, of course, of the court funds at that point, but your general funds were down to $84,000. We're going to talk about this before, but you know, if you're down to $84,000 at the end of September, and your expenditures are $2.7 million, there's no room. There's no room for mistakes, and that account affects you. If you actually put the payroll liabilities and tacked into it, you were in the holes at the end of September.
Shouldn't we have about 2.5 to 3 months worth in general fund?
Like, what would that number take? Well, in 3 months worth of things, $700,000.
Yeah.
So it's somewhere in this ballpark.
I'm paying still 600.
Oh, it's, you know, your funds are way too tight for these mistakes and for qualities and things you've had to pay. Unfortunately, it's just really too tight for that. We've got a lot of the water and all that stuff's reiterated in there again on page 17, 18, when you can start to make the payers have got their own separate financial statement to go to Bank of New York. You know, have a different gig for them to do. Heavy to it. That's 17 and on page 18. Just page 18 is probably, if you look at page 18, just to give you an example, so I can point that number out for you, yes, by the way. in the revenues at the top, and there is a column for park. There's still some assets that were booked up there that's separate enterprise. Because also there, I was going to clean that up this year. I just left. I don't even change the presentation or anything. So it's kind of shifted all to the general side. I don't think it really needs to be there, but that's how your books have been. So I didn't change it. Anything, but the third item is the other fees. That's where those reconnects and all that other stuff come into play on their accounts. Again, it's just under 36,000, and it was over 74 the year before. But again, the board's kind of been having to deal with same issues and same as different, whatever, but just related.
The $40,000 doesn't missed out on collecting.
Basically, that'll make a difference for them. They showed maybe 300. Their depreciation number was a whole lot different animal to deal with. But they were give or take about $80,000-$90,000 short on that ratio numbers on theirs, because all that depreciation gets added back on their side. Well, $40,000 that might have been foregone will be different from their number. Correct. It's important. It's all important. I want to show your debt areas just so you can kind of see what kind of things you are dealing with. Because it does drive a lot of your cash flow. Page 26. Look real quick right there, and then there's 12 pages of retirement disclosure for 3 or 4 pages of budget stuff that repeats some of this water stuff that you just looked at that the fire department paid in the back. So that was one of the last things we had to do. I hadn't, all the other accounts over there were reconciled, but that one had not been updated since about May, so we had to get to that update.
We had no report from the fire department in a long.
I'll show you that. I'll show you that in just a minute, so you can see it. Page 26 at the bottom. If you just to note, you got. These are things you're having to pay for. So you got a bank for lease. That's $2,500 a month. You got the first U.S. bank note, the newer one, that's $5,000 a month. So there's another first U.S. bank loan. That one's close to paying off. Regions Bank below that $7,000. That's a bond issue. It's down to give or take $500,000 now, but the cash flow right now that's $12,000, $13,000, $14,000, $15,000, $16,000 a month. Just about on the general side. So that's pretty stout. Especially when you get these dry periods.
Where we gonna fit this $225,000 dump truck in there, man? Saying on it. But stuff. We need the contract. You bring it tonight? Got it on my desk? Okay, we didn't say that. Well, about to sell. We need to.
Yeah. Oh, yeah. No doubt. Been working on it.
Unanimity.
Well, I mean, we're still on the white truck, as a matter of fact, because we never changed the contract.
Sorry, didn't mean to get signed. No, it's like showing charge. Page 27 shows you what the water board's dealing with, just so you get an example. They got $4.3 million in bonds and notes there, and the principal repayment, just for example, the year you're in right now is $210,000. You got to tack another $120,000 probably on top of that in interest. So that's what kind of debt service they have to try to keep up with the USDA. So I guess from my side of it, beyond just looking at what happened and we can't really fix, you got to really fix the spending side of the house.
Both the city and the water.
Because, we're not only going to raise $2 million in sales tax. That ain't on it.
Hey, that one time got us out, and we're investing this now.
The water.
Taxpayers don't reserve that.
The water is going to get dealt a letter from back in New York without question about theirs. Then they're going to want a response. So what are you doing about expenses, or what are you doing about rates? Now, they did go up.
We're at 2.5 January. You're at $2.5 million. You own that bond right now. We're at a 3 to 4% interest rate. What are they going to do to our interest rates if our books are being fast? Are they going to go up 5, 6, 7%?
Well, BNY won't do anything short of on the interest rate. What they ultimately get forced hands on would be rating sheet.
Right.
They want to know what you're gonna do. That's what a 10-year plan comes into.
Oh,
We iterated to them last night. So one thing we had with what we finished, well, the question came about, is what about these financial statements? What does that mean? Larry and I talked about this, but it's like, hey, I've got financial statements in a proper format because we assist you in preparing financial statements. What I can't tell you is all the underlying data had all the evidence we needed to say, hey, those numbers are materially correct. I mean, they're perfect. No, none of them are ever perfect. Are they? We feel like they're comfortable that they're correct. There's no big process. I can't say that on.
You don't want to sign off on this?
I can't say that on. We got too many variables out there. Too many different things that happen, and you can't do it. What I can do is you got something you send to them, they're going to look at it, their analysts are going to look at it, they're like, let's do what we got to deal with. You got to deal with the book. You got to find, you got to deal with debt service. Oh, you got to look at the city side, fortunately, doesn't have debt service issues, so it's like Regions Bank's not coming here and say, hey, you got to raise your taxes. They can't force you necessarily to do that kind of stuff. They don't have that authority, but that's where it ultimately falls back on just over the governmental side, your side, it's the general taxing authority and or what you're doing expenditure wise that governs how well you make these requirements towards authority. Tell them you got a challenge going after them. So I know we're working at one thing we did not look is a liability, for example, which I talked about, I guess the mayor as well, is you pay Tyler $50,000 on the general fund side, but they're give or take 34, 35 against all the water side. And they're still billing you for another $87,000. They said somehow you owe they to this. I got a trial now, so it's not in fundamental. Well, bring it out. Right order when I pray about one or two. How did you set this up and might get that right? About what we worked through done with Tracy and show back the boils. Getting all those numbers updated through September based on the depreciation schedule based on the note schedule, so that all those fundamental parts of the books are in order, and so all that can be pushed through as a 25 fiscal year you're in now on and down trying to get that switched over. Here's the challenge. You got some of these issues in 25. Some of the stuff rolls over. It's just a question of stopping most of it, which, well, I think them done a good job at. But you're gonna have some of this rolls over. For the challenge is get these things updated and get what you need in there so that when you get October, things are in good order as they can possibly be. You'll have routine, regular auto adjustments you always do for receivables and payables and things of that nature. Those are the routine things that happen every year. But the rest of that needs to be in cleaned up and ready, and payroll, all the other things this is working on. You did payroll this week out in Newman.
I did.
So, get all that done so that October 1 or y'all and whoever comes in behind you has got a clean, straightening up set of books and something that somebody can understand. Because I've got, it frustrates me look at see that was charged and what they said you owed for what you appeared to get in return on this bit up.
And they wanted to charge for trainings.
Yeah. What trains?
It was
It was a mistake from the start. That's too much money to think about.
Anyway,
recommended it.
They can't do the presentation.
like they
Now I thought it was great.
Everybody did. Y'all voted.
We didn't know we go on the opinion of real, but
Yeah, we
recommended.
Y'all voted the presentation software.
We did correct.
Yeah, we trust y'all.
Yeah, sure. I can tell you what happened. There was frustration with the accounting side of the system you have. I actually think the group does a pretty decent job with their utility side. Because I see them do billing other places. most of these companies I personally see doing billing stuff, when you get to their accounting side, it's not the same level. It's like, well, they started out as billing companies and they wanted to add all this other stuff. And, other places, a good, comfortable, clean set of QuickBooks or Save is good for 95% of the entities that float around out there. It's just basic accounting, fundamental stuff. And I think you had a desire to try to make everything too automated and try to maybe do stuff in place of having staff, not wanting to have staff, well, we'll just do this. This isn't more. And then I know the one thing that I said before that happened, before we were in here one day, all right, if you're going to go that route, I saw no numbers. I'd say $80,000. You gotta be kidding. But so like, if you go in this route, make sure everything is rolled over, organized, and put in the right order, because you had gone through that with the appraisal side, and they went, you had to close the QuickBooks accounts you have. And we talked about this. It was messed up entirely. The software they got corrupted. I was losing that it's like the whole tree fund or the tree just disappeared one day. He couldn't get it back. That's a simple fund. I can sit there and audit it in 20 seconds. Well, it just disappeared on QuickBooks, just gone. And one of your other folks was in here that day, and they looked at it. They would figure stuff like this and stuff. So, that had to happen. But, hindsight 40/20, at that point, you just said, let's go get it. A brand new clean desktop arrangement, just so you get a brand new clean set of QuickBooks and just start up from scratch instead of ever going diversified when the diversified had its issues. So then this thing was supposed to try this new one, this new group to come in. We go, they're greatest thing, head of accounts. Okay, and it's just in question. And so you get that, and you probably, I'm assuming you didn't see a quote that ever said it's going to cost $100,000. That's when had a diversified from real good party. When was this implemented? The tower and the diverse different. How many years ago?
Well, since you said Black Mountain, it was
But from the accounting side, it would have happened. It was after you had already.
Yeah.
It was probably not long lived. Before we went through the last audit cycle 23. So you had a full year. That's a version of the software. Full year, and it's constant terror. There was problems with it, but it made it kind of work through. The year before, this 22 year, I don't recall. Seemed like they tried to convert it around the beginning of that year with him. End of 22, the very first of 23, 21. End of 21, I'll start to point. We've been around there when merged by accounting and stuff. You've been on their billing stuff. Because I'm like, now, so I like, good luck.
According to what that new technology was, they writing checks.
This new tower one was one had this stuff set up where you could do all this stuff automated. And it's 21st century, it's all in the cloud, all the signatures,
Tell me how much was it writing check? Was it? I know the names on it. Was it writing check?
Well, you key everything in and train them out.
Come on, by itself.
To tell it.
Come on, by itself without any.
I did a button.
Got to hit a button, right? Somebody had to hit a button.
Yeah, you got to do it.
Oh, we were told that you could hit a button on this system and you realize anything we wanted.
So somebody got to push the button, right? Somebody got to push the button. Somebody.
Oh, just Diane, here's a question, and this is probably important because the fire chief's probably don't need this, so he may need it. Well, I'm sorry about that. You need us that page 41 all the way in the back, almost like.
I saw that fire thing.
Yeah, it's just a little summary page of the fire department.
you know, I put that in there and
So we
it's,
did that. We're responsible for that account.
well, he has to turn in stuff for fire association and it gets them off. Because like I said, we had to go in and make adjustments, and this account had not been updated for
Well,
about,
we hadn't got a memo a long time. We used to get one month from the fire department. Yeah,
yeah, I don't think it's been updated since May. When we looked at it,
I know.
it's stuff like that, April or May, we had
Fine.
some adjustments to put that in there. So that, they may need that, whether it's.
All right, so I hate listen
Fair of that, but,
about.
yes.
I'm looking over here and I'm seeing some I hate miscellaneous.
Oh, I know.
2,400 and
So that probably, you come in the fire department, it's,
hate miscellaneous.
that we're using there, we'll supply part of that. I can't remember, it's about 5 or 6 account.
And then
She'll see it in them.
I might want to use the word odor. I'll try to use the word odor in the future. So
I don't provide items like water.
and here's what you should get though. Here's what, 'cause this one I'm getting, that's what frustrated, and I know you all share this. What you should get, what we recommended, serious last year, like that, but you should get banks reconciled and get a monthly balance sheet and P&L or both of the forwarding cost.
That would be,
You should see that.
that'd be nice.
And so, like, if you look at an audit, you may have 4 categories related to repairs with the building and maybe the pest control and maybe some other you know, audit, they may all show up under repairs and maintenance of the buildings. Otherwise, you got,
It's fun.
but what you should see monthly or quarterly, some interval, your staff ought to be able to get to where they can provide you that you do see all week. Now, what I can tell you, after going through with this, you can go get Tyler for out a report that's got all this stuff on it. Okay, it's there to be reviewed. You can go back through it, whatever anybody wants to down. So, you may answer this question. You brought. I don't at this point see anything on the city side that would say go and playing the kind of moments down to the water for looking at other options. You know, like it make accomplish it without having to. At the end of the day, I'm not even sure all cares if I do, and that's just, if you force me to, I'm not sure I'd even recommend it there. I'll think what you're gonna do is you're gonna find the more totals of what they get. Here's one to see the question is what are you gonna do about it? Yeah, no, what are you gonna.
Here's one right here, Don, really stands out to me. Our net pension liability, 2020, $698,679.
Dude,
2023, $1,083,159. That's a huge increase.
Huge. I'm gonna tell you one thing. It's fortunate. You're right. You're somewhat fortunate. I'm gonna this copy for your minutes, Tracy. I'm gonna fix that. They try to say, oh, I need to say that. Oh, you're there. The one thing you may be a little bit fortunate about in that regard is your match. I mentioned is only right now it's trailing about 11%. I've got anyone last week or so at 20. I did a state agency up in Franklin County about 6 weeks ago, like 39.
Can we sign?
39%. Do you want to have to pay a 39%?
No, I'm saying sign me up.
No, they're actually working for it. But this gets from the Don's point is you're having to count for everybody who's been here and retired.
Yeah.
So they adjust your rates.
Yeah.
And you've probably been fortunate based on retiree figures and some other stuff that your rates are higher than ours.
Yeah.
So I got another little city very similar to you, about 3 hours south of here, and there's just about 30.
we should might basically what he's saying is note in the shell is they got a lot of retirees right on live.
Right.
Is where we ain't got that many.
That's probably
Yep.
It is what I mean.
Yep, that's right.
You didn't have the utility boards. That's, like I said, that may be one of the reasons you don't necessarily want those pins that are just fed you got more employees, you're spreading it. So yeah, this would be separated. All of a sudden that changed. Yep. The closest to me got jealous that watching Mayor
Still in your question?
So when we have retirees that die, do they and take spouse continue to get a check? Or when we got retirees that die, do we continue to pay that check to the spouse?
he should.
The big cent, yeah,
It was a lot. The on site retirement.
Yeah.
basic, yeah, on the
Yes, first. Yes, just living on the I think there's a short term benefit or something that gets some in the mix of that, but it's
that they approve. That's too
Right.
set up. Right.
yeah, no.
No, Frank, it takes a long time to find deficiencies through an audit. The crime would be if you found deficiencies and didn't do anything about it. We corrected deficiencies. Need to point out the council by law is vested with financial oversight and responsibilities, so we all have a stake in the outcome of the city's business. What's problems is been identified. It takes both council and mayor working together to bring a resolution to problems. We'll move forward from here with the assistance and cooperation of the council. We can promise you that.
Mike, can we make a motion that we install a time clock for city?
I think we kind of just did.
It's been implemented 10 years ago.
We can do it. We just do it.
We gotta have the checks and balances.
So we can do it.